there is a shift. The people who are riding bikes and scooters on roads in the tier one and the metro cities are migrating to four-wheelers because the market for the various options in the four-wheelers is just growing in India right now. So the SUV segment has just grown in India. Earlier you had the smaller version of the sedans, etc. But this boom in the SUV segment, everybody wants to buy an SUV. Okay, so that is also the concept where this migration is happening in India. Elsewhere, every household has got a car, right? So you start now talking about the road conditions, you talk about the population of vehicles, so you're thinking about carpools and thinking about two-wheelers. But here, the hunger for owning a four-wheeler is still not saturated in India.
Hello and welcome to the Goldcasting podcast. Today we have a very interesting subject. We're going to speak about the Indian market for die castings. And we are very lucky and happy today that we have Mr. Bambra, Mr. Tej Bambra with us today, working at Rockman company in India, knowing most of everything when it comes to the Indian high-pressure die casting market. So very welcome, Mr. Bambra.
Thank you very much. Pleasure to be here.
Oh, we're happy to have you here. We know you, but I am not sure that everybody in the audience knows you. So could you make a short introduction of yourself, Mr. Bambra?
Yeah, sure. So first of all, thank you for having me, Fabian and Staffan. I've been into this trade for almost 37 years now as a second generation die caster. My father started it way back in 1961 when I spent almost 25 years of my career as an entrepreneur running a die casting shop as a supplier to most of the tier one die casters in the country. And then I spent almost like 3 years in Hong Kong and China for development of die casting dies and creating die casting dies across the world. And approximately 10 years now with two Hero Group companies, the Hero Motor Group companies of die casting. And right now I'm with Rockman for the last 7 years in the capacity of the head of sales and marketing for them. So mostly I've spent my career in the hardcore operations. It's been about 3 years plus that I've taken charge as the chief marketing officer at Rockman.
Interesting story. One should like to sit down over a couple of beers and discuss it more. I guess there are a lot of stories and a lot of knowledge. But getting to the knowledge, we hear a lot here in Europe and the rest of the world that India is now coming like the big balancing factor of China and so forth. Could you give us an overview of the Indian die casting industry? What is actually happening?
I've seen the third generation of die casting in India, way back from the times in the early 70s where everything was manual and gradually converted into automation. The auto ladles and sprayers, etc., came in. And now I see the latest technologies being used in India with the robotics and closed loop systems and die casting in operation. Coming to the comparison with China, actually, it's a very difficult comparison to make. Not the right comparison to make in the die casting industry per se, I would say, purely because the volumes, the economies of scale in China, because of the sheer demand, are very high. Just to give you a few figures, India, for example, in 2025, in the aluminium die casting, was doing about 300,000 tons per annum of die casting production, which was actually 9 million tons in China. Okay, and then the market in terms of value was roughly about $1.5 billion in India, which was approximately $5 billion in China. So, surely on account of the scales and the domestic consumption, the export consumption, you cannot make a dichotomy of the trends. Having said that, the Indian market is growing in the die casting in terms of the technology which is coming up. Like I told you, we've seen a change in the generation of the die casting that is happening. A lot of automation is coming up. But since the scalability of the business is not there, both in terms of domestic consumption and exports. So you, for example, don't have the mega castings and giga castings consumption at all, practically nil in India. Whereas if you compare it to China, there's a huge difference. And also the per vehicle consumption of aluminium in China is roughly 1.5 to 1.7 times of what that is in India. And largely also because in India, we're still operating at roughly 95% of the IC engines, vehicles, 5 to 6% includes the hybrid and the EVs in passenger cars.
Mm.
In two wheelers, it's slightly large and the volumes are larger. I mean, we do roughly about 4.9 millions of four wheelers, passenger vehicles, and about 21 million of two wheelers. Whereas if you compare it with China, against the 4.9 million four wheelers in India, China is doing 27 million four wheelers. And a large part of it is in the EV segment where the aluminum consumption is high, the consumption of giga castings, mega castings is high, the higher tonnage parts are more, and different alloys which are used, the ENAC series, and also magnesium, etc., for
Mm.
lightweighting. So that is the gap between India and China at the moment.
But still, you say it's a growing industry in India.
So, yeah, because the government has worked up on certain tax reforms where they have reduced the GST on the mid and the lower vehicle segments where the demands are growing. So, that has been very recent, and there has been a boost in the sales that we see in the last 10 to 15 days on account of the lower taxation. The sales have gone up, but we've yet to see whether this is going to remain for a longer time or it's going to just be a short term pent up demand, which might just taper down going forward. Because the high end vehicles or the larger CC vehicles have been also taxed to a higher GST rate, while the lower ones have been reduced. So somehow it has got balanced. So it's growing in the automotive segment. But on the other side, things like the export markets to US and Europe on account of issues like the US tariffs, etc., the export demands have shrunk. Now, India, in terms of automobiles, is doing only about 10 to 12% as exports, which is very less in terms of, I'm talking about the complete vehicle sales. In the auto component industry, the exports are much lower than that, would be 5 to 6%. So maybe less, 2 to 3% in the component industry. And the die castings are largely used in the component sales, in the both in the OEM markets and the aftermarket sales. So that is where the hitch is. That is where we are kind of sluggish, not coming up to the levels to be compared to China at the moment.
Oh, that's an interesting comparison. When I just summarize what you said, that when you compare China to India, that the local demand isn't that high, and now it's still growing, but still you see the effects of the tariff situation worldwide. Also, then what I wanted to ask is, how do you bring in the technology, the new technologies into India to increase your sales potential? Where does all the machinery and all the technology providers come from?
See, in the die casting industry, largely, almost like more than 95% of the equipment in terms of the machinery and the equipment is sourced from Europe and China and Taiwan, largely. I mean, you talk about the dies, you talk about machinery, so you have Bueller, you have Freck, you have Zetai, you have Izumi, you have Haitian, all these companies from the Asia Pacific and from Europe. These are guys who are selling machines and technology in India. And the problem is that these technologies come at a very high price. So, where we are facing a challenge is that our cost of technology, the capital expenditure on technology, the cost is very high. And unfortunately, when you build it up in the per part price, the cost of investments, I mean, ultimately you pay a financial interest and there is a depreciation on the equipment. that needs to be built up on the per part cost. Now, you don't get paid for that. You are compared to maybe low cost manufacturer in China who is doing it on cheaper local made machines with different technologies, which is easily and cheaply available there. And when you bid at a global platform, your pricing doesn't match because you end up paying a lot more of expenses in the technology and the equipment. And there are also, subsidies that I know of, which are there by the government in the Chinese organizations, typically the way they work on the part pricing and the revenues they generate. In India, unfortunately, that's not the case. We have some subsidies for automobile manufacturers and component manufacturers who want to produce parts which are being going to be used in the EVs, but then the EV penetration is very low. So what do you do? So cost of equipment finally built onto the part price is a big deterrent, which holds us back. And this when you have biddings or when you are in a price competition with the Chinese suppliers, for example. So that's a big challenge which is there. But the government is now with the current geopolitical scenario. I think there are talks with China on technology transfer and collaborations, which was held up till the last 2, 3 months. And now we have our prime minister who's visited there. There have been some dialogue, and we see that gradually the doors are opening for technology. And maybe someday, you never know, you'll have these Chinese companies open to coming up in India and setting up their plants here. So then, the demand and the technology transfer, cost of technology becomes lesser and cheaper. So we are looking forward to that right now.
So the cost level on the investment. So what you're saying is that an investment in China is less costly than the investment in India. And one major factor that you're looking at is, first of all, the internal demand in China is much higher, so you can spread out your investment. And second of all, maybe they also do a little bit more of export. So they kind of eat the cookie and still have it.
Correct. And also, the volumes, the economies of scale are much larger. Even in the export markets, the kind of demands we get are of parts or components where the volumes are not as much. You can reduce your part costs in case your volumes are larger because then your capital cost gets offsetted with the volume on the per part price, which is not the case. We've faced a lot of situations where we have ended up investing in big technologies for products in exports, but the volumes have shrunk. They've gone down. Some of the major OEMs worldwide have had a big catastrophe in terms of volumes. We know it, worldwide. So we got into an engagement with some of these customers who promised us big volumes. We made the investments to the tune of some $2-3 million, more than that in some cases, maybe $10 million, and then it snapped. It did not go forward. So all those investments went bust. So that is a big fear factor on the volumes part. Because if the domestic consumption, like in China, is large, you can manage doing it. If not for one customer, you have another one, you have another one. And there are so many models which are common to a lot of these OEMs. So as a product, it doesn't fail. But here, that's not the case. Each individual vehicle and each OEM have their set of designs which are different from each other. So it's not that one part production fits into most of the other vehicle parts and your volumes or your inventories are secure. That's not the case. I think that's another
But
factor.
technology lies in machines, but it also lies in the material. We hear a lot about magnesium in China. How is the magnesium die casting situation in India?
Magnesium is still a baby. It's at a very child stage in India. For example, our market size in terms of US dollars in India would be hardly $250 million maybe for magnesium. Whereas in China, it is close to about $1.5 billion. That's the gap. So the reason being, there may be two, three established players for magnesium in India, but there is zero sourcing of raw material. It's all imported because we all know 90% of the magnesium for global consumption comes from China. So we don't have raw material manufacturers. We don't have recyclers, or we don't have the technology for recycling the runners and the scrap. So you end up sending your runners and risers and scraps back to recycling to the position where you buy the raw material from, which could be in China, which could be elsewhere in the world. There are some suppliers in Europe also who in turn buy from China and sell it from Europe. Okay, so you have to send that back. The technology is not there. Then largely the demand, even in the exports. See, magnesium you use a lot in the frame parts or the grills and the fairings for those vehicles, or even alloy wheels, for example. But in India, the cost of that technology, one, the raw material availability, two, and the recycling cost, three, all adds up to a much, much higher cost. So, which is like, the entire value or the ecosystem for the manufacturing for magnesium, the idea gets defeated. You cannot compare it, or you cannot make it as a substitute to the aluminum die cast parts with additional value, right? Because the cost of manufacturing is high, the cost of technology is very high. But having said that, it has become the talk of the town in the die casting fraternity now. We have certain symposiums, seminars where people are coming from all across the world to discuss the potential for magnesium in India. I mean, we are going to have one seminar in December where you have people coming from overseas to find out the potential. It would grow, but in India, I don't see any OEMs in the passenger vehicles or two wheelers who have come up with their demands for magnesium castings, or who have floated RFPs for magnesium die castings. Not to my knowledge. Yeah.
But I think we're hitting on a crucial point here. What you're saying about magnesium, I guess, is true also for aluminum. If I don't understand the situation wrongly, you don't have raw material production of aluminum either.
No. We have very large smelters in India in aluminum raw material who are catering to the domestic demands largely. See, aluminum in India, I would say 90% plus is all ADC level, ADC 12, aluminum that is being used, the Japanese standard. We have now gradually converted into some mechanical parts where we are using the ENAC series, the 43500 and 45000, etc. But still, that is less. We have big, large level smelters and players who are manufacturing these alloys in India. But a lot of it, of course, is getting imported from the Middle East because you have huge scrap pile up there, and there are a lot of people in India who are doing the recycling of secondary aluminum and converting them into the alloys for domestic consumption. So the primary alloy is governed by the pricing by the LME exchange, and that is acceptable to all the tier ones and OEMs. So that is still not an issue. But again, if you compare globally, the size of the aluminum die casting that we are doing is still very less, in comparison to China or the other Asia Pacific countries like Japan, Vietnam, Taiwan, and the other countries. It's still less.
But I mean, it's a growing market. It's not that sizable as in China. I have two customers in India. We hope to have 3 and 4 within a year as well. I see a curiosity about new technologies like semi-solid casting and other new technologies from India. And these guys, they seem to be like, okay, we are what we are today, but in 4 or 5 years, maybe, the projection says China will have a higher cost level because A, they cannot afford to give subsidies on that level for years and years and years. And B, salaries increase and energy increase and everything increase. So at a given point, they are betting on what will happen when China is becoming more expensive. What is your take on that?
You're right. See, what we have spoken about is the existing current scenario in India as of now. If you talk about 5 years from now or 10 years from now, surely like we are talking about technology tie-ups with countries like China, if you have these people coming to India or the European companies coming to India to set up their plants in India, where the demand increases for raw materials and for technology, surely there will be a demand, there will be a growth. In I'll give you an example. For example, in the four-wheeler alloy wheels, earlier 10 years ago, we were all banking on the steel fabricated rims, which got converted to the alloy wheels largely by one large player who was catering to the demands, but it was still very less. Today, the consumption in the passenger vehicle segment for alloy wheels and aluminum is roughly about 70% to 75% of the total production demands. It has gone up to that level. And you have a lot of players who have come in for the manufacturing. So if you take 4.9 million vehicles or four wheelers, out of which 4 million cars, for example, use alloy wheels, so you need a 16 million capacity for alloy wheels, considering four wheels per vehicle. So that is already there, established. And people have gone into different technologies from the conventional gravity casting to low pressure and now to flow forming technology where they can reduce the wall thicknesses and make a lighter alloy wheel with better mechanical properties. So the customers have started demanding, but it's not the floodgates have opened to that technology. There are few players, like you mentioned, for your products who have bought. Similarly, for these products, again, we are all dependent on sourcing from the European manufacturers and the Chinese manufacturers to get the technology on board. And then you need to go and market this to the OEMs. They are not aware of what is the right technology for them. You, as component manufacturers, need to go and do your sales pitch to market these products to them. And then comes the value, what you bring on the table in terms of the pricing. You are adding a technology, we just discussed about it. So, again, having said that, 5 years from now, I surely see that with the awareness and the demands growing up, the vehicle demands growing up, this 4.9 would become 10 million by 2030 or 2034. The EV penetration, which is at 4%, the government talks about a 25 to 30% EV penetration by 2030. Even if it is half of that, the demands would grow. So I see a potential, I agree.
But it's a challenging time for the foundry industry. When you see what you presented earlier, that you have the limits on the capex expenditure, also with the higher pricing, then there's also in India that you need to market new solutions that bring an advantage, which marketing is usually not a strong suit of most foundries. And then you have the increased demand that you have to fill with the constraints and not being squeezed out by Chinese suppliers in India. So that's quite a demand. And
that's a challenge. But like I mentioned, Fabian, either you have business tie-ups with the good OEMs and the tier ones worldwide who are ready to invest. For example, the European customers, they have invested in technologies in China. We've seen Tesla doing an investment in China big time to manufacture the vehicle. So if you have the European customers or the US customers investing in some institutional investments or foreign direct investments in India to set up captive plants for their consumption, maybe projects which would support the Indian market and also support their overseas markets. That, if happens, it will boost the demand. But we've seen that there have been huge import duties or taxations which are there for setting up. Tesla came to India for discussions two times. Then we had BYD and VinFast to set up their plants. They've taken land. They planned to have investments, but then they pulled out because of the duties. And they have set up, centers where they are doing the CKD assemblies. So the sourcing is from all across, and you assemble the vehicle here. The duties are less on that, and you sell it in India. But it doesn't help the industry, the component industry in India per se. So when it comes to manufacturing in India, when these guys think about actually starting manufacturing in India, that will be the time when the demands go up. There'll be a spike.
But I'm under the impression that okay, the car production, car market is maybe not that super big in India, but still growing, is still very interesting. But the backbone in Indian industry is actually the two-wheelers. And well, I understand also that there's a quality and technology shift in the two-wheelers. And I assume this is because there is some more and more ambitions to actually export the two-wheelers outside India to the rest of the world. And we see that you're already doing Royal Enfield, some BMW,
Yeah, Hero
and other.
Motorcorp, a lot of, see,
Yeah.
two-wheelers is roughly 16%, 15 to 16% of the production of the two-wheelers getting exported, as against 7 to 8% of vehicle four-wheeler passenger cars, etc. There is a demand for exports. The two-wheeler industry has grown. There was a dip during the COVID and the post-COVID, but now with the GST reforms, there is an upsurge that we are envisaging, but it's too early to say because we'll need to see the market trends in the next 1 or 2 years, how it goes, and what is going to be the EV penetration. We are expecting a 14 to 15% growth in the EV segment in the two wheelers. That, if it grows, you have players who are working on the lightweighting of the frame parts in the EVs, including the alloy wheels, the front, rear, and the mid frame parts, the battery cell housings, battery covers, inverter housings, covers. That is happening. So, yes, two wheeler still is the backbone. There is no doubt about it. The growth is there, but it's slightly early to predict what percentage of demands would increase because that market also is saturating into multiple players with various models. But the overall volumes, if you see, like I mentioned, 20 million, by 2030, this would be 25, 26, maybe close to that is the prediction. And then when the EV share increases, the IC engine share would phase out. It's not that the overall share of the pie would increase.
No, that might be, but now it comes a personal reflection. I think that means of mass transportation will be more diverse in the future. Well, I'm 55 now. When I was 18, getting my first car, which happened to be a Ford metallic green, a very cool thing, 90 horsepower, by the way. And then we always spoke about cars. And today, with urbanization, I see the new generation, I see the electrification. I kind of think that it's not that natural that you actually buy a car. If you're living in a bigger city like Pune or, God forbid, Stockholm, you go with the train, you go with the bus when the weather is bad, meaning November, December, January, February. But from March on, then you take your two-wheeler. It could be an electrical bicycle, it could be a small motorcycle with a battery, it could be a big motorcycle with an ICE like me. But buying a car is not that, how should I put it, natural. It's not the natural reaction for a guy being around 20. When I was around 20, you had a car. How rusty or whatever it looked. You never discussed to have a two-wheeler. Today, my kids, they're 20, 24, 27. They discuss much more, about carpooling, two-wheelers, electrification, and so forth. They don't buy a car. So my assumption is that a couple of years back, the record year, we made 89 million vehicles on this globe. I don't think we will reach that for passenger cars anymore. I think it will be less, but we'll see more advanced two-wheelers. And here I think India has a very strong position. Do you agree or not?
I agree with you. You see, in India, the economic strata is divided into the rural areas and the urban areas. The urban areas divided into the metro cities, and then you have the tier two cities which are there. So still there are a lot of people who are migrating from bicycles to two wheelers and motorcycles, etc. But these are the ones which are the sub 100cc or 150cc segments, which is the largest chunk of the Indian two wheeler production. The Royal Enfields and the other bikes you're talking about are the bikes which are used in the metro cities, which are more for the youngsters and the youth. Where it becomes more like a fashion statement, the college going students, etc. They are there. So the migration for two wheelers or the adaptation of two wheelers for a mode of transport in the urban cities is not there. It's still the affordability for the passenger vehicles is much higher. people who can afford four-wheelers or passenger vehicles would still want to go in for passenger vehicles. There is a shift. The people who are riding bikes and scooters on roads in the tier one and the metro cities are migrating to four-wheelers because the market for the various options in the four-wheelers is just growing in India right now. So the SUV segment has just grown in India. Earlier you had the smaller version of the sedans, etc. But with this boom in the SUV segment, everybody wants to buy an SUV. Okay, so that is also the concept where this migration is happening in India. Elsewhere, every household has got a car, right? So you start now talking about the road conditions, you talk about the population of vehicles, so you're thinking about carpools and thinking about two-wheelers. But here, the hunger for owning a four-wheeler is still not saturated in India.
Yeah,
So
it's interesting. So what you're saying that in our part of the world, it might be like what I'm saying, but in India, the car is still a choice of identity, a choice of freedom. It's a more practical thing.
yeah, it's a symbol of status. You owning a
Mm.
car is a status symbol, and people who can afford with their SUVs on roads and exhibit and show off their swanky
Yeah.
cars, and with the new models and the new EVs and everything coming in, there is a huge demand which is there.
Then I will retreat by doing this comparison. I'm speaking out of how I see the market in Sweden. We are 10.1 million people. You are addressing India, which is what, 1.4 billion
1.4
people.
billion people, and the per capita consumption of these vehicles is still very less.
So what I'm claiming about this, is a very local thing.
Yeah, you're right. Exactly,
We're a bunch
exactly.
of retired guys up here in Sweden, and the youngsters in
Yeah,
India, they go like,
yeah.
I want a SUV.
Yeah, so that's going to be a big competitive advantage that India would have, even in terms of the manufacturing costs or in terms of the overall GDP growth in comparison to even China, maybe 5, 7 years, 10 years down the line, because you'll have younger population, which is phasing out in Japan and China and all these countries. The average age is much higher than what is in India.
Yes.
And if all goes well, we'll have more younger generation trying to come into manufacturing and boosting the manufacturing. The automotive segment is contributing roughly about 7.5% to the overall GDP in India. That should grow. That will be a sign of an economic growth coming forward. So that's a big advantage. Yeah.
It's so interesting. So what we're saying in summary is that Indian die casting industry is growing. It has problems with the competition from China, basically on the basis of scale. More car makers, more internal market. But it's a promising market, also from the perspective, the two-wheelers, and also that you have a growing population looking for a nice car to drive in Indian conditions.
Correct. Correct. It's a growing market in the metropolitan cities and the tier one cities. They are growing. The demand is growing, and the demand for high-end, even two-wheelers, like I told you, these segments below the 150 cc, which are the more affordable vehicles where people are buying, who are just graduating from bicycles to motorcycles in the rural areas. They are buying those ones. And the higher cc segment has also seen a very good growth in the two-wheelers above 350 cc or 250 cc. Royal Enfield is one of them that you mentioned. So they are growing.
Yeah, with 300 you go a long way. I mean, you go a long way also with 125. I started riding a motorcycle, it was 125. Then I had 800, but that was a little bit too strong for me, actually. I mean, it made 0 to 100 below 3 seconds, and it was a transplant candidate equipment rather than a motorcycle. So now I'm actually looking at Royal Enfield. I would like something a little bit slower, a little bit more like myself.
Yeah, so Royal Enfield comes up from the categories of 350, goes up to 750 also.
Yeah, I know.
And it's the number two selling two-wheeler even in the UK, the United
Yeah.
Kingdom.
Yeah.
So they've done a fabulous job in terms of the design of the vehicle.
Yeah, they use that. I mean, you have a model called Himalaya
Yeah,
that
the
is
Himalayan,
used,
yeah,
to drive to that mountain, and
correct.
that road is not paved very well.
Yeah,
So,
that's an off-roader. That's an off-roader
yeah,
two-wheeler vehicle. Yeah.
yeah, interesting, interesting, interesting.
So we can summarize that basically, as we understand it, the future of the foundry industry for the local market is in the two-wheeler industry, and the increasing demand for vehicles for the younger generation that now starting their working life. And the Indian market is growing, but it's not at that level that everybody expects it to be, that it will replace China next week.
So automobile manufacturing, we've already become number three in the world after China, Japan, and then India, in terms of the overall demands. Of course, in the automobile sales part, you still have China, US, Japan, and then India comes at number four. So this itself is an indicator that the markets are opening up, the growth is happening. But if you compare it with China in terms of volumes, there is still a huge gap to cover. We are very close. We've beaten the United Kingdom. In terms of overall GDP, we've come number fourth in the world, and we are heading. And manufacturing is playing a large role in the overall growth of the Indian economy. So we are very positive. And apart from these passenger vehicles, there is a big demand in India for the agricultural vehicles, the tractors, and the commercial vehicles. There's a lot of electrification going on in the commercial vehicle, the trucks, the buses, all of that. And the agricultural demand for tractors, etc., is also huge, which is much higher than what it is in the rest of the part of the world. So that adds up. If I talk about, we've only spoken about two-wheelers and passenger vehicles, but if I add up all of that, there is again a segment which cannot be ignored in terms of growth going forward.
Interesting, interesting. It's been very interesting to have you here, and we hope to meet you many more times in the future, Mr. Bambra, and to discuss this. And discuss is one thing, but to follow, to see the signs of this growth that I think all three of us actually think will happen within not 20
Yeah,
years, but maybe 5-10 years. And
5, 10
5-10
years.
years
Yeah.
in die casting industry is basically a car model, I would say. So I
Yeah.
mean, it's a short time,
True.
yeah.
It's a very short time. Yeah.
So again, thank you very much for being here. We hope to see you in trade fairs and conferences, and maybe also in this podcast again. Grateful to have you here.
It's been a pleasure to have known both you and Fabian, and we'll continue our connect to discuss more technologies. And it will be
Yes.
good if you guys can come over and spread some information on the latest technologies that is happening. And when we discuss that, we should also discuss about the commercial part of how the per part pricing can be matched in case we want to adapt to these technologies. How we can do that will be an interesting topic of discussion. And it's been an honor and pleasure. And we look forward to meeting up at the Yogas in January.
Absolutely. So you who are listening to this, meet us, Mr. Bambra, or all three of us at the Eurogas. We look forward to hear your reaction and continue the discussion live, which is always very interesting.
My
Having
pleasure.
said that, also you listener, please subscribe. And if you have any comments or ideas, please send in to us, and we will be very grateful for your reactions. So with these words, we say goodbye. See you next time. See you in Eurogas.
Bye-bye. Take care. All the
See you
best.
next episode.
Wiedersehen.
Goodbye.
Sayonara.
Goodbye.